Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are several things to pay attention to for the upcoming trading week. Now, first off, let's talk about what happened last week. We ended the month of June with the worst first half performance in 52 years. Pretty dismal out there. Hopefully most of you have been playing the short side over the past few months, as a lot of the economic data we've been presenting in these sessions has been fairly negative. As we always say, the trend is your friend until the bend at the end, and those trends are down for right now, but that can change at any moment. Now let's move on to the good stuff. Of course, this week, you've got a short one. Monday is going to be 4th of July, which means markets are closed, so happy 4th of July out there, everybody. Go out there, light some fireworks, be safe, and if you are going to drink and have a great time with your family and friends, make sure you take an Uber on the way home. That's point number one. Number two, let's talk about, well, we're going to look at things like central banks. As you know, over the past few months, almost every central bank has been raising. Even the Swiss National Bank has gone from negative 75 basis points to negative 25. They increased 50 basis points. That's crazy. Japan and Europe are over there going, no, we'll stay right where we're at. But we do have some banks which are going to be raising, at least the expectations are, they're going to raise this week. And as you can see on the screen here, Australia, the Reserve Bank of Australia to be precise, has a rate announcement coming out Tuesday. That's just after the crack of midnight Eastern Standard Time at 12:30 a.m. They're going to be raising, or at least the expectation is that they will be raising from 0.85% to 1.35%. Again, another 50 basis point increase, as seems to be the norm right now for most of the major developed countries. So if you are trading the Australian dollar, be very careful. That could create a lot of volatility. Now, to the really big stuff. We've talked so much about inflation numbers and growth, right? GDP numbers. What we haven't really addressed recently has been jobs. Now, as you know, in the U.S., every Thursday you have unemployment claims numbers come out. Well, we have some big data happening, and it's not just for the U.S., but we're going to start in the U.S. Here are the 4 huge employment data numbers coming out for the U.S. this week. We start things off with the JOLTS job openings. That's Wednesday at 10 a.m. Now, the JOLTS isn't the most significant, but it does set the tone for the remainder of the week. Next on our list is a huge one, ADP Non-farm employment change. Again, cue the dramatic music, dun 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 dun. The industry really focuses on this one. As you can see, Thursday at 8:15 a.m. Eastern Standard Time, that data comes out. Now, moving on down the list, you've got non-farm employment change, which is similar, just calculated differently because ADP puts out the first one, and then you have the non-farm employment change happening Friday at 8:30 a.m. Eastern Standard Time. And finally, the big daddy, which everyone is expecting to stay right where it's at 3.6%, the unemployment rate for the United States. That's at 8:30 a.m. Eastern Standard Time on Friday as well. So a lot of huge employment data numbers. Now, why should you pay attention to this? Because there are some drivers for the Fed's decision and rate policy going forward. The number one is going to be inflation. However, we're hearing a lot of news over the past few months about major layoffs happening. You see it at Coinbase.com, and you see it at Tesla, and many, many others are starting to ramp up layoffs. Well, if we start to see that job data tick up, all eyes are going to turn to the Fed, and they're going to be like, hey, what are you going to do to help us out here? And the Fed's going to go, we can't really print any more money. We can't do quantitative easing. We can't do Operation Twist. We can't send out checks to everybody. Why? Because we'll just add to the inflation number. So all of a sudden, the corner that the Fed is backing themselves into gets a little bit tighter and tighter and tighter. And remember, the big fear for most people in financial markets is not necessarily a recession. It's not necessarily a depression. Stagflation is the one that is probably the most dangerous one and the hardest to get out of. Now, what are the components of stagflation? Number one, you have really high inflation. Check. Number two, you have GDP growth slowing down. Check. Number three, you have unemployment surging. We don't have that yet. So all eyes are on this employment data for the U.S. to see if we start to see an uptick in the unemployment data. And if that does happen, stagflation starts to rear its ugly head. That could create some problems for our markets going forward. But wait. We're not done. That was just the U.S. Let's take a look at what we have internationally. I've got 2 announcements as well internationally. As you can see right here, first one's coming out from the Swiss unemployment rate. That's going to be Thursday at 1:45 a.m. Eastern Standard Time. And finally, we round things out with the Canadians, the neighbor to the north. They will give their unemployment rate at Friday at 8:30 Eastern Standard Time as well. Now, that is a ton of economic data. What I'm pretty sure will happen, lots of market movements, lots of anticipation as to what's going to happen when this one reports and then that one reports. So you should see some volatility. And as we started off the show with Happy 4th of July, remember, it's a short week. A lot of people are taking Tuesday off as well, which generally means the markets have lower volume, which means lower liquidity, which means if you send out an order, that same order on a regular day might not move the market, but on a thinly traded day, it could have a lot more volatility. I expect wider ranges for this 4th of July week. Happy 4th of July, everybody. We'll see you next week.